In the face of skyrocketing costs, Tesla stands out as an affordable option. Analyst Dan Ives reveals Tesla's bold decision to lower costs everywhere, sparking a revolution in EV pricing. Actually, given the current circumstances, demand is clearly softening. This has been seen in China with the ongoing price war. However, I think that the poker decision to lower costs was the right one. In my opinion, the stock has already demonstrated this by boosting demand for Tesla. In terms of what we're seeing with regard to demand in the US and around the world, they are undoubtedly going through a shift. If you look at scale and where we anticipate they could go to production, we're going to be looking at 2.5 million, ultimately hitting 3 million in the next year or two. I will simply refer to this as the intermediate stages of the subsequent phase of the Tesla growth cycle. One of the biggest and best examples of artificial intelligence to date is Tesla. With the possible exception of Microsoft and Google, the processing power and data they are accumulating are essentially unmatched by other automakers and may even be unmatched globally. Dan Ives recently disclosed that by 2025, Tesla plans to drastically reduce the cost of all EVs by a staggering 20%. Ives underlined that Tesla is deliberately lowering its prices as part of an effort to increase its market share and attract a wider range of clients. Tesla's demand and decision to continue lowering costs have put the company in the limelight recently. The carmaker has reduced the cost of some of its models in a number of markets. While some analysts think this would not be a good idea, investor and Tesla bull Dan Ives says that Tesla made the right decision by lowering pricing and creating adequate demand for its vehicles. Additionally, he projects that by 2025, Tesla automobiles may be considerably less expensive than they are now. We'll find out why Dan Ives made this forecast and how he thinks Tesla will succeed in today's video. We have a lot to share with you, so make sure to watch this video through to the conclusion. Now, let's get going. At under $39,000, the base Model 3 sedan is now comparable to a Toyota Corolla and $9,000 less expensive than the average American automobile purchase. 4 or 5 years ago, owning a Tesla was a luxury, gimmicky item. Today, it's comparable to purchasing a Toyota Corolla. The significant price reductions that Tesla has carried out are a great fit with the cost of ownership. The cost of leasing or buying an automobile on a loan has increased dramatically due to the considerable increase in interest rates. Tesla has fought this by lowering prices while keeping its profit margins intact. Customers' reaction to these price reductions has been astounding. All-time highs have been reached in web visitors to Tesla.com, up 59% year over year. This is a significant action from a business that mostly sells products online, particularly on Tesla.com. The fact that those website visits are at all-time highs in response to these price reductions indicates that Tesla is consolidating its lead in the EV industry and starting a one-horse race. It's only a matter of time until Tesla overtakes all other automakers. Tesla hopes to draw in more customers by lowering the price of their cars, especially those who were previously undecided about buying an EV. Tesla can stay ahead of the competition in the very competitive EV industry by lowering prices. Keeping up with the times and providing competitive pricing will help Tesla stand out from other automakers in the market. However, what is the maximum extent to which Tesla may reduce car costs, and what are the long-term implications for its profit margins? Let's investigate. Welcome back to Tesla Tomorrow. Every and Dan Ives highlights Tesla's accomplishments in economies of scale and cost effectiveness as crucial elements that allow the business to lower prices. Tesla may reduce the cost per unit of manufacturing as it expands operations and improves its production methods. This will allow the manufacturer to pass these savings forward to customers. Following the release of Tesla's third quarter 2022 financial results, Elon Musk reaffirmed the company's intention to build more affordable vehicles during a conference. The CEO of Tesla asserted in a prior interview that the company wants to produce cars at a lower cost. Predicted on past opinions, this is probably going to be a smaller $20,000 to $35,000 electric car manufactured in China that will ride on a new platform used in the upcoming generation of electric vehicles. As a result, the cost of producing electric cars will drop. What does this signify for Tesla, then? To find out, keep watching. Before we continue, though, please make sure to press the like button, subscribe, and enable post notifications if you enjoy this kind of content so you can stay informed about all things Tesla. One of the top EV manufacturers in the world, Tesla wants to hasten the switch to sustainable energy sources. In the EV market, the automaker must contend with a number of obstacles, including escalating competition, interruptions in the supply chain, unpredictability in regulations, and shifting consumer preferences. Tesla implemented a new approach of lowering costs on some of its well-liked models, like as the Model 3 and Y, in Europe and the US, in order to get past these obstacles and increase consumer demand. According to Dan Ives, there are a few reasons why this is a good strategy in the long run, even though it has hurt Tesla's profit margin. First, in the fiercely competitive EV market, Tesla may grow its market share and sales volume by lowering its prices. Tesla may draw in more buyers who are searching for high-quality, reasonably priced EVs by bringing down the price of their vehicles. Long-term, this will assist Tesla in growing its clientele to include younger and middle-class consumers who would have previously thought an EV was too pricey. Additionally, it will improve consumer loyalty and Tesla's brand image in the EV industry. Tesla can show that it is committed to ensuring that EVs are more widely available and reasonably priced by lowering their prices. Tesla exceeded Wall Street expectations in the second quarter of this year by delivering 466,000 cars worldwide. Dan Ives believes that this record number of EV deliveries proves that Tesla's price reduction were a wise decision that will eventually quiet business bears. Tesla may be able to stave off competition from other manufacturers who are introducing similar features and cheaper EV cars, such as Volkswagen, Ford, and Hyundai, by lowering their pricing. Tesla can achieve high factory utilization and lower its fixed cost per unit by lowering prices. The carmaker plans to reduce its working capital and inventory requirements, which will free up additional funds for R&D, innovation, and expansion. Tesla needs to start producing its less expensive EVs as soon as feasible in order to increase efficiency. Compared to a Model 3 or Model Y, this new platform is expected to have 50% lower production costs. Less space and personnel will also be required in manufacturing facilities as a result of the reduction. Musk claims that Tesla plans to produce more cars on this new platform than it will with all previous Tesla models combined. That would entail producing more than 1 million EVs of its most cheap model annually. Dan Ives has consistently backed Tesla's decision to lower pricing, even though there isn't a set timeline for this to happen. The bears refuse to acknowledge the obvious advantages of this action. Since customers may now experience the benefits of owning a Tesla vehicle without feeling financially constrained, price reductions can boost customer happiness and retention. Long-term benefits for Tesla include the potential to boost sales volume and market share, boost cash flow and profitability, and strengthen the company's reputation and customer base in the EV industry. Dan Ives is still very optimistic about Tesla. Like analysts like Cathie Wood, he sees the company as a significant participant in the AI, tech, and EV sectors. He claims that Tesla is a tech firm rather than an automaker, which is important since the company can monetize some really value services to generate enormous revenues. Tesla has greater plans, and these price reductions are just one aspect of their approach to realizing their goal of becoming the top sustainable energy company in the world. How do you feel? Tell us in the comments below. Go ahead and click on the following video to see more about what Tesla has been up to in recent days. I'll see you over there.